Now it's time to take a deeper dive into deferred income annuities, which meet your income later needs. A deferred income annuity is also referred to as a fixed annuity because the interest rate is fixed, and can also be referred to as a longevity annuity because you can receive that guaranteed income for life. By the end of this video, I'll give you the facts so that you can make an informed decision about whether a deferred income annuity is the right fit for your retirement portfolio. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit the notification bell so that you can receive notices anytime I post new videos. So I want to start with a recap of what the annuity benefits are. So if you've been following along with me, you can probably regurgitate those in your sleep. But if you're new or you need a refresher, let's quickly go over what the annuity benefits are. So we talked about guaranteed income for life, money that you cannot outlive. We talked about principal protection. And note that in the most recent videos, I did note that you have to be careful how you structure your annuity contract to ensure that you do get 100% of your principal returned to either you or a beneficiary. No market downturns. So even in the midst of market downturns, you will continue to receive that guaranteed income paycheck, and the amount of your guaranteed income paycheck is not dependent on the market performance. Now, with respect to a deferred income annuity, as I mentioned before, it's commonly referred to as a longevity annuity because it provides you that guaranteed income for life. Also, with respect to a deferred income annuity, you can put in a lump sum payment, one single payment. It's even also referred to as a single premium deferred annuity, or you can make flexible payments during the deferral period. It's only at the point that you start receiving those income paychecks that you stop making payments into your deferred income annuity. So with respect to that deferral period, that period where you're investing money into that annuity contract, it cooks for a period of as short as 13 months or for as long as 45 years. So you can see how a deferred income annuity is an excellent tool for retirement income planning. Also, bear in mind that the longer that your money cooks before you start receiving those guaranteed income payments, the more guaranteed income payments that you receive. So as we've talked about, the guaranteed income paycheck consists of three components. So that would be a return of principal, your interest, and mortality credits. That payment is calculated based on the age that you start to receive those income paychecks and your life expectancy. So just to give you an example, if you start up a deferred income annuity contract at the age of 50 and you cook it for 15 years and start receiving those guaranteed income paychecks at the age of 65, the amount of your guaranteed income paycheck is based off the age of 65 when you start receiving those income paychecks, and not the age of 50 when you started that annuity contract. Also, keep in mind, the older you are when you start to receive that guaranteed income paycheck, the higher the guarantees you will receive on that annuity contract. Leave me a comment in the section below and let me know if you currently own a deferred income annuity. If you're enjoying this video, be sure to subscribe to my YouTube channel and hit the notification bell so that you can receive notices anytime I post a new video. The interest rate on a deferred income annuity is based on the 10-year Treasury note, which is currently less than 1%. So that doesn't sound very appealing, does it? But bear in mind what problem you are solving for. You are solving for that contractual guarantee where the risk is transferred to the insurance company. And you want that because only an insurance company can manufacture those invaluable mortality credits. And the older you get, the more mortality credits you receive from the insurance company. That's where the deal is on an annuity, is those mortality credits. Also, there are no annual fees for a deferred income annuity, and the commissions are pretty minimal. The contract for a deferred income annuity allows for a death benefit, which means you do not have to pay for a rider. And I don't know if you remember me mentioning this when we were talking about single premium immediate annuities, but the more guarantees, in other words, the more riders you purchase, the less benefits you're going to receive in the form of guaranteed income paychecks. So it's actually great that the deferred income annuity allows for a death benefit and you don't have to pay a fee for it. Also, with respect to an annuity, you can get an inflation rider to help cover the cost of inflation. So keep in mind, if you do purchase that inflation rider, that your payments are much smaller at the beginning and grow with time to cover that cost of inflation. With respect to suitability, so again, there's really no specific age, especially if you're trying to fill an income gap. But statistically speaking, people who are between the ages of 50 and 65 are the ones who purchase a deferred income annuity, again, as a retirement income planning tool. We are finding, due to the COVID pandemic, that a lot more younger people, younger than the age of 50, are actually starting to include deferred income annuities as part of their retirement income planning. I want to mention a few similarities between Social Security and a deferred income annuity. So they both do not charge an annual fee. In addition, you can get inflation protection from both a deferred income annuity and Social Security. Now, Social Security is an inflation adjusted product, whereas in a deferred income annuity, you actually have to purchase an inflation rider to get the protection from the cost of inflation. Also, I didn't mention this before, but both a deferred income annuity and Social Security cover either a single life or joint lives, which joint lives would be 2 lives. In addition to that, both a deferred income annuity and Social Security, you get more income benefits the longer you wait. So I'm not sure if you know this, but Social Security, you can start to receive those benefits as early as 62. But just so you know, if you wait till the age of 70 to start receiving Social Security, you can actually get about 65% more in income benefits from the government. With respect to a deferred income annuity, as I'd mentioned before, the longer you cook it, in other words, the longer the deferral period, the more income benefits you'll receive when you start getting those income paychecks. Whether you want to insure your income or obtain retirement insurance, having a deferred income annuity in your retirement portfolio may be an important piece. If you feel like you cannot retire properly without a deferred income annuity in your retirement portfolio, click the link below to become my client. Also, if you enjoyed this video, give me a thumbs up. Be sure to subscribe to my YouTube channel. Hit the notification bell so that you can receive notices anytime I post a new video. Be sure to share with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement without outliving your money.